being undervalued would not make the stocks automatically go up.
It's funny that in the stock market, you buy something because you thought it was a good time to buy it, and someone sold you that thing because they thought it was a good time to sell.
Top 10 most undervalued stocks in Malaysia. Let's go.
10, 9, 8, 7, 6, 5, 4, 3, 2, 1, 0.
Undervalue means the stock price is lower than its intrinsic value. What is intrinsic value? All the stocks in these days has been vetted from these three criteria: the PE ratio or price earnings ratio, PB ratio, price to book ratio, and current ratio. See, no regret clicking in to watch this, right? No fluff, as promised. Entire top 10 list delivered to you in under 1 minute by me, CF Liu, one of the most hardworking and prolific independent licensed advisor in Malaysia, spoon feeding you in this CF Liu channel. All I am asking for is just a gentle tap on the like button below. Oh, so easy. But ensure you stay until the end of this video if you want to learn more how to fast track your way to filter out undervalued stocks in each sectors in Bursa Malaysia compared to their peers, enough to get you started before you pay 5 figures for any value investing workshops out there. First in the list, this is what Oriental Holdings does, and this is its PE ratio, price to book ratio, and current ratio. In short, PE ratio or price earning ratio shows what the market is willing to pay for a stock based on its past or future earning. A high PE ratio could mean that the stock price is high relative to its earnings, and that could mean it overvalued. Conversely, a low PE might indicate that the current stock price is low relative to its past or future earnings. For example, the average PE for S&P 500 US is around 13 to 15, so low PE could mean undervalued. Second, Lotte Chemical Titans. Now this is the company business, and this is the PE ratio, PB ratio, and current ratio. PE ratio is not exactly cheap, but PB ratio is below 1, which is a good sign of undervalue. Let me explain. The price to book ratio is another common key indicator used by value investor and market analysts. It compares a stock to its book value, also known as net tangible value or not net asset value. Traditionally, any value that is below 1.0 is considered a good price to book ratio value, indicating a potentially undervalued stocks. Third, needs no introduction, Mah Sing, the famous property developer who are venturing into these rubber gloves in 2021, remember? Now I want to draw your attention to this 3.36, which is the current ratio. A current ratio that is under 1.0 indicates that the company debts that could be due in a year or less is greater than its asset. Assets like cash or other short-term assets that can be converted to cash within a short duration of time. Why does this matter? Now you maybe thought if there is more debt than a company asset, then the company may go bankrupt. I'll explain more in a while. Fourth, KSL Holdings, another company with property development as its core business. Although it's in a smaller market cap compared to Mah Sing, its PE ratio and PB ratio reflects it's severely undervalued, while its current ratio is almost at 8. Now, a higher than 1 current ratio, as mentioned, means the company is sitting on a lot of liquid assets or cash, and it is much more than its liabilities that needs to be paid off in the next 12 months, which means that if the company wants to go delisted or taken private by its owner or major shareholder, they easily could have money to buy back the shares from minority shareholders like you and me. Now this is not unlike what Top Growth has been doing, where they repurchase like billions of shares from the open market. Now although Top Growth is not in this top 10 list because it's not exactly undervalued, but it's really sitting on bucket loads of money. Fifth, MK Land, slightly high PE ratio, really low PB ratio, and cash which is slightly more than its short-term debt. Still on undervalued company by PE ratio or PB ratio. If a company is sitting on a lot of cash, especially if the cash pile is much more than the market capitalization, the owner could be very motivated to take the company private. Now you look at what these property developers companies will be doing going forward, right? Where the business is impacted by the pandemic now. People are jobless, they have pay cuts, so buying another property would be the last thing that is on their mind. Even people who can afford to buy, they may adopt a wait and see before they buy. So The thing is, sales for all these property developer has dropped since the onset of the pandemic, and some more in an oversupply, overhang market or property glut. This actually worsened the situation, which is why you see property developer stocks are on the downtrend. Now I teach you how to see and how to compare, say MK Land and Ecoworld. Both are property developer company. Both are undervalued, but MK Land can more easily be taken private and delisted from Bursa Malaysia because it's sitting on more cash than Ecoworld, whose liabilities has more than its assets. 6. WTK Holdings with a low PB ratio and a very positive current ratio. Now, you imagine you are the owner of the company selling this hot item. People loves it. And you want to take it public listed lah, right? Why? Well, we want to raise more money to expand your business to China, Taiwan, Vietnam, Thailand, Indonesia. But suddenly, you have a new competitor and price cheaper and they like your competitor products more. So your sales drop, right? But the thing is, being a public listed company, you still have to do a lot of this compliance work wherever which stock market you're listed in. Now, this kind of compliance thing takes money, not to mention hassle, right? Even, the thing is you have to do that and the company is not really doing well. So you think, it's very troublesome, so mafan. The thing is you got the money in the bank and you might think, hey, why don't I just use this money to buy back all the shares in your company that you don't already own? And then when you take the company private, then again you have the full control of the company. And you don't need to do things like, a public AGM lah, every year lah, your stock price drop, then you kena what we call as unusual market activity, UMA query by Bursa Malaysia lah. Like, see, so there's so many things. Better take it private when it's undervalued, right? Some more, if you take it private, you can enjoy all the profit going forward from your company. So the thing is, if your company is profitable, why you want to share it with others, right? Correct or not? Now, it's just like you're not going to share your underwear with others, right? Not even your brother or father, correct or not? 7th, Sapura Resources, commercial and industrial property developer in Klang Valley. See, very undervalued, huh? If you wonder, hey Leo, how do you see all this financial ratio in one page? Then I want to ask you, what brokerage or CDS account are you using? Don't have a brokerage account yet, CDS account yet? Then watch this on the upper right hand corner. Learn how to actually open a CDS brokerage account in Bursa in under 10 minutes. It's the fastest way that I know. 8. Fintec Global, diversified business, you read on your own lah, but also very undervalued from P ratio, PB ratio and current ratio standpoint. Now, does that make you wonder sometimes when you say I buy a company stocks undervalued, but the stock price is not moving one, or worse, it keep on going down? Why? Now, it can be due to the stocks is not covered by a lot of analysts, therefore it's not under the radar of a lot of investors. Then why it is not covered by a lot of analysts? Because of the management of the company did not do enough investor relation. That's why you see a lot of these big companies, proper one, public listed company, they have an investor relation department. But then you need to grab the attention of the investor. Any stock, any public listed company is the same. Especially retail and institution investor. Especially institutional investor on top of the retail investor. So when this investor know your company, right, and they know you, like you, then only they're going to buy the company stocks. If an investor don't even know your company exists, don't know what your company business is, and don't know what is the potential of your company, then no use, because that is the only way that the stock price could go up. If nobody buys a stock, would it go up or not? No. So just by a company or stocks being undervalued from accounting standpoint would not make the stocks automatically go up. It's like you saying, I'm very lang zai, sangat handsome, I earn a lot of money, I got the 5C lah, car, condo, credit card and all that. But every day after work 9 to 5, you just go home and play computer game until midnight. You never go out and meet people, never go and mingle, mix with girls and all that, ladies, right? You cannot complain why you no girlfriend, why you cannot find a wife, correct or not? 9th, Xidelang, cash cow and undervalued, but do your due diligence before you invest, because China company. Now, disclaimer, this is not a recommendation to buy and this is not a stock tips. I'm not responsible for your loss, but when you profit, then you subscribe to CFU channel for more. Right, now the info presented to you here is subject to change, so don't follow round. Jangan ikut bulat-bulat. Please check again the figure before you invest, but the method will always be the same, will always be evergreen. So the thing is, when I give you a fish now 10 fishes today, you take it. But in the process, you also want to learn how to fish yourself, True or not? Don't be lazy. Come on, man. Astaga. Retail investor that invest in a stock and if the stocks that you are holding, the company suddenly want to go private or go delisted. Now, it might be a good thing or it might be a bad thing. So imagine you bought the stocks during its IPO at the price of 1 ringgit per share, and then the price go up to 5 ringgit per share after 3 years, and then the company owner say, I want to take it private at 5 ringgit 50 cents. Wow, you profit off, untong, right? 10th, China Ouhua wine. Now, the PE ratio is really outrageously high. It's not undervalued by any measure, but PB ratio is low, and it's also a super cash cow. But what if you bought an IPO shares at 1 ringgit per share, and then after that it keep on dropping to until 50 cents per share. But now the owner say that I want to take the company private at 60 cents per share, which is again 20% premium more than the current price of 50 cents per share. It seems fair, but the thing is, don't forget you bought at IPO at 1 ringgit per share, then you are still losing money, correct or not?
Isn't it funny that in the stock market, you buy something because you thought it was a good time to buy, and someone sold you that thing because they thought it was a good time to sell? Both people in this deal think that they're the smart ones. Mark Cuban says, always look for the fool in the deal. If you can't find one, it's probably you.
Now, in the case that undervalued stocks is not really your cup of tea, you want to focus on, let's say, high growth stocks in fast growing sector, or you want to invest only in high dividend stocks, or you might wonder what is the most consistent dividend stocks in any stock market, or maybe you want to do day trading, then check out any of these videos popping up in front of you, because I have covered that previously. If you don't see it in front of you now, it could be in the upper right hand corner. Click on that and go watch all of them. Thank you for watching, and don't forget to click on the like button if you have not, and subscribe as well if you have not already, because I am sure you have found this superbly useful.